Alright guys, I tried my very best to make this stationary, but since I freestyle, nothing's scripted. So today's episode is about subject to investing post-pandemic. So again, subject to investing post-pandemic. What does that mean? What is subject to investing? I'll get into that. First of all, nothing I say here is financial advice. These are just my opinions. Since 2016, I've been predicting that we're going to have something called subject to heaven upon us, where we're going to see massive losses in the stock market and in the real estate sector, which we have seen in the stocks. And in my opinion, there's a second level of losses coming, second leg. And on top of that, the real estate market is going to melt down from commercial to residential. So many people are going to be upside down because there's going to be a flood of inventory coming to the market because of the bug, and which makes this year, the best year to be a real estate investor, in my opinion, because it's what I call subject to heaven. Now, what is it subject to? It's subject to is when a motivated seller, okay, is willing to let an investor to just take over their payments, versus that investor having the cash to buy the property or getting a loan to pay the debt off, because the existing debt of the seller stays in place. So a subject to is when a seller allows an investor to just step into their shoes, make the monthly payments as if it was the seller originally. And here's the important part, that the deed, the ownership of the property transfers to the investor, not the seller. So simply put, the investor becomes the rightful owner while controlling the property. They could refinance it, they could carry it, continue paying the payments on the property, and you know what? Just carry it to the loan retires. Okay. And that's what a subject to investing is. Now, in 2020 and moving forward, is going to be massive amount of motivated sellers in the market, because many home buyers didn't put any money down, if there was VA loans or FHA loans, and many of these properties were blown up by asset bubbles thanks to the Fed, which is going to cause massive homes without equities. Okay, and what that means is that there's going to be a lot of sellers upside down in their homes, and they're not going to have an option, and this is where a subject to comes into play. So now that you know a little bit about what a subject to is, let's talk about the do's and the don'ts. And before I get into that, I also want to talk about what is a motivated seller, because that's very important to understand. A motivated seller is someone that must sell their home. There's two types of motivation out there. There's what we call emotional and financial. I'm not going to get into that here. I've done it in many other videos, so go check them out. But remember, we're not dealing with the average seller. We're just dealing with motivated sellers, and that's the whole key. That's the ingredient. That's the golden egg. Because if an investor is dealing with just the average seller, then these deals are not going to work like I'm talking about. Only when we're dealing with motivated sellers. Okay, so now that you know what a subject to is, now you know the main ingredients to a subject to. Let's talk about some of the do's and the don'ts post-pandemic. Okay, the first thing is that one of the do's is that because there's going to be so many people losing their jobs and not being able to pay rent, it's going to be harder to find qualified renters, which means that there's going to be a higher risk for vacancy. And that's why, in my opinion, cash flow has to be king. Cash flow has to be king in these properties. For me, it would have to be $1,000 plus a month that I make off a property before I decide to make a commitment, make a marriage with the seller to take over their payments. Because vacancy is going to be, you know, a tough thing, especially when majority, 40% of Americans can't get jobs. So that said, number one thing would be massive cash flow, because I can't just get $200 or $400 per property, because the risk is a little bit more. I got to get, you know, $100,000. And here's the amazing news. Today, historically, interest rates have never been as low as they have ever been in any decade since America was born. Okay, so that's not a problem at all. The other thing is the Fed is printing money, which is making rents go up, that's not a problem at all. And in some areas, rents may come down just a tap, but again, they've been so inflated so much that it's still a lot of cushion in there compared to with mortgage 30 or 50-year notice. So going back, one of the most important thing is motivated sellers, and one of the do's is positive cash flow, but not just a couple of $100. But for me, they're not telling you what you should do. It has to be at least $1,000 or closer there or plus per deal. Okay, and I focus on entry-level homes, first-time home buyers, so you can figure that out. Okay, so the other do's are deal with motivated sellers. And then people say, well, Mike, how do I find a motivated sellers? Well, here comes one of the don'ts. Not telling you what to do, but I never use real estate agents. Okay, never use real estate agents, because real estate agents are not going to allow deals to happen. It's kind of like saying, hey, I want to, buy stuff really, really cheap from China, but I'm going to go to Foley's or I'm going to go to Dillard's and try to negotiate with the sales rep or with the manager to get them the price that they get it for. It's never going to happen. Okay, if you want to go to Foley's, you got to pay retail. If you want to get dirt cheap, you got to go to China. Okay, so the same thing here. If you want to pay retail, you use a real estate agent. They have MLS, etc. If you want to get it at a deep discount, then of course you're most investors that are smart, they're not going to be using a real estate agent. Okay, now they have one on their team, but they're not looking on. When I say real estate agent, I'm talking about the MLS. They're not going to be sitting here looking on the MLS. Now there are investors that out there that do it and make money, right? But there's too much competition. There's smarter ways to do it. They just don't have the skill sets to do it. Okay, now motivated sellers. One of the don'ts is I wouldn't be using the real estate agents, which means I wouldn't be looking on the MLS, nor would I be. Here's another don't. Nor would I be looking on the auction. Okay, the auction, everyone's there, the hedge funds there, the people with the money there, and these are the guys that have the money and they don't have a whole lot of marketing skills or creative strategies that they don't even know about they exist, like OPM and equity maximizers, and they're at the auction. So I wouldn't shop there. I wouldn't shop at the MLS either. So those are some of the don'ts. Some of the do's besides the positive cash flow, besides motivated sellers, is, depends on your exit strategy. What are these areas that the home is? Is this a war zone? Is this a appreciating area? For me, I only want to buy homes in an appreciating area with great schools, great work, places that people are going to work. There's plenty of jobs. The days on the market is not high. That means that I could get a renter in there in 30 days or less. I don't want to have a property where I have to wait 180 days just to get a renter in there. Nor do I want a property in BFE, buttfuck Egypt, where there's no jobs there. People don't want to commute out there. Maybe when they buy a home, but not to rent. So that said, those are some of the do's and don'ts that I'd be looking for. Now, the other thing, do's that I'd be looking for is, the seller must have a fixed mortgage. But majority of the mortgages that I've seen that are out there because of the Dodd-Frank Act and some of the other rules that were in play are already fixed. So they're not arms or adjustable like the last crash. Okay, so I'll be making sure that they are fixed mortgages. Preferably 15, but I'll take it 30, and ultra low interest rate. And the other thing is that is that when I buy a home, usually it's a newer home, prettier home, doesn't need any repairs, and I got to make sure that the taxes are correct, because a lot of times these people buy homes, right? Buyers buy homes from agents or home builders, and the very first year their taxes are very, very low. The next year their taxes are now calculated correctly, right? And then their escrow is short and their monthly payments goes up significantly. So I don't want to take over house payment in that situation where for the next year or two I have to pay extra, and then the payments adjust back to where it was. I don't want any of that, because the day one that I buy it, I want to make sure I'm cash flowing. Okay. One of the other do's is that in 2020, everyone wants to buy equity, and I'm with that 100%. Guys, click the like button if you could. Thank you. Support the channel. It helps with the algorithm. Okay. Everyone wants to buy equity, and I do too. But in 2020, 2021, and moving forward, because of so much motivation, because of the pop of the real estate asset, equity is going to be hard to find and harder to find in homes and homeowners. So the other best thing after equity is cash flow. So always be looking for the cash flow. Of course, I highly want equity, but I'll take a free house where I don't have to qualify. The seller's willing to let me just step into their shoes. I don't have to have all the money. I can do a non-recourse loan. I step into the seller's shoes. They've already made a few years of payments, which means the majority of the payments went to the interest. Now when I take it over, more of it is going to principal reduction. I'd be happy to get a free home and get all the benefits of it, only coming up with the next month mortgage, right? Or paying the seller's closing, or making the seller's back payments up if they're behind 2 or 3 months. Okay. Especially if the house is going to give me $1,000 positive cash flow every month after I pay off the mortgage, pay off the property management, the vacancy, etc. So the other do is that I always want to negotiate with these home sellers to get a non-recourse loan. Okay, non-recourse loan is very, very important, and I'm not going to get into that, but if you go to my training, my free training at mrnofluff.com, type in general real estate words, and you'll learn what that is. Okay. By the way, if you're more interested in learning about how to do these deals, you need help, then I highly recommend joining my academy. You get access to monthly coaching, plus you get access to all my advanced courses for just freaking $47 a month, guys. Okay, I normally charge a lot more than that, thousands, and now my wife is twisting my arm. She says this is the best time to be a real estate investor. You should help as many people as possible, and I agree with her. So basically, for less than I can go out and feed my family, for a family of 4, I'm gonna help you guys be your dreams, because I want to hear your success stories on YouTube. So $47 a month, you get monthly coaching. We're on top of it. We're on top of you, evaluating all your questions, helping you. Plus, you get all the advanced courses for $47 a month. Go to mrnofluff.com if you need help with that. Okay. Now, let's talk about some of the don'ts. Okay. Some of the don'ts is just because a seller's willing to give me their deed. Okay, I'm not just gonna willing to go take it. Just because the seller's willing to let me take over their monthly payments, doesn't mean I'm gonna go out there and just take it. Okay. The first time back in the last crash, I did that, but I was a rookie. So one thing I learned is just because someone's going to give me something, it doesn't mean it's something good for me to get. Okay, so that's one of the don'ts, is always double check, do my homework, make sure this is a property that I want, because when I buy a rental property, it's like a long marriage, and you want to make sure you're married to the right property versus the wrong property, because I'm gonna the other don't is that last crash I was scared, right? I was more scared. This crash I'm not gonna be scared. I know what I'm looking for, and I'm gonna stick to that, and when I find it, I'm gonna pull on the trigger. I'm not gonna be scared like I was the last crash, because it's a refugee to America. My parents didn't know anything about real estate. I didn't know anything about real estate. My dad sold ice cream in an ice cream truck, so I was learning this stuff as I went, and I had a great profit. I had great success with it, but in this crash I don't need so many doors. I just need to cherry pick the best of the best. I have some criterias, and if the deal doesn't fit those parameters, then I'm not going to pull on a trigger. So basically what I'm saying is I'm going to look at a lot more deals and pass on more deals than I'm going to buy, versus the last crash where I was happy to get any deal that came through that was profitable. and I didn't care as long as it was a good area and it was profitable. This time I'm gonna be more picky. But that someone else's situation might be totally different. They're trying to do 1,000 doors and they just want as many free houses they can get. Okay, I say free houses because it's pretty much a free. I don't have to get a loan, I don't have to get a mortgage, I don't have to use my own credit. The seller is becoming my bank, and that's why I call it as a free house. Now I'm still reliable for it. I still got to make the payments to the seller. I made a promise to make payments. I'm going to make the payments, and I got to do all the repairs that come to it. Just like owning a property, I have all the responsibilities of ownership, fixing the plumbing, the roof, anything that may happen, the vacancies, evictions, etc. But then it's also a business because I'm not going to be living in there. I'll turn it into a rental property. But some people may want to live in there, right? Some people, like my very first deal, I lived in my own first deal that I bought. Okay, so guys, click the like button if you have any comments. Click the like button if you have any comments, leave it below. Don't forget about the academy at mrnofluff.com. Let me see if you have any questions real quick. All right, hello from Hawaii. What's going on, man? Jordan, what's going on, Jordan? I believe you joined the academy. Welcome in. All right, guys, I'm looking forward to helping you guys and doing some deals. I want to buy your deals. Get into the freaking academy. Let me help you. I don't care if you're in California, you're in Florida. There are highly motivated sellers out there, and this is our time to shine. Peace.